Hello, ladies and gentlemen. Good morning from this part of the world. And depending on what time zone you are tuning in from, I want to wish us all a good afternoon and good evening. Well, it's the final trading day of the week, Friday. Happy Friday to everyone. And we are going to be preparing ourselves for the final trading day activities, as it is expected that market participants also will be rounding off their trading activities ahead of the weekend. So today we are going to be looking at how well the asset we are monitoring so far this week have done, and of course use that historical data we identify on the chart coupled with the fundamental factors, that is the market drivers influencing the sentiment, to help us strategically position ourselves for today's move. So once again, I'm very excited to welcome you. And in preparation for today, I do have simple, insightful trading setup that you don't want to miss out on as we navigate the current market dynamics. So far this week, we have been monitoring three financial instruments, which includes the US All Spot, the GBPUSD, and of course, my favorite, the XAUUSD. And in fact, we've done tremendously well across board. That does not mean that we did not have some challenges across the board, as in we had some couple of losses along the way, but we were able to recoup the losses and be on the positive side of our portfolio. The US All Sport on its own part has done tremendously well. Remember, we have been buying that commodity. The JPUSD also have done tremendously well, where we had both buy, and then during the earlier part of today, we saw that tremendous bearish move that happened following that not too impressive GDP data from the United Kingdom. And of course, the XAUUSD has continued to be strongly on the upside. So today, as we prepare for today's session, let's first of all go into the economic calendar. Of course, you know how we do it. By monitoring the economic calendar, we tend to pinpoint potential correlations between key economic releases and specific technical patterns on the chart, giving us that valuable information needed to strategically position ourselves for the next move. So, based on the asset we are monitoring for this week, we have been focusing on economic features from both the United States and the United Kingdom economic dockets, where during the course of the week we've had some events that really influenced the sentiment in the market. However, the most important, or let me say the main event for this week, came in on Wednesday, that's December 11th, and that was the consumer price index. And of course, I did talk about the anticipation of this event on Tuesday, our first edition for the week. And for those of you who are not familiar with the implication or what really is the consumer price index, well, this is a data that measures the average change in prices of goods and services in the last 30 days, hereby indicating the inflation level in the United States. And of course, market participants were anticipating this event, which led into some extended sideways trading activity before the event. And theoretically, a higher CPI usually signals rising inflation, while a low CPI may indicate a low inflation, which could prompt rate cuts, hereby weakening the US dollar. Now, from the data that came in, market participants were looking forward to a 0.3 and 2.7% respectively, that is for the month on month and in year on year. And in fact, the data came in just as market had expected, a little bit higher than the previous month, showing us how persistent inflation is in the United States. And of course, with this idea in mind, the Fed Reserve may likely be banking on a less aggressive approach as regards to the monetary policy. Sorry, an aggressive approach as regards to the monetary policies. Then another major event that came in during the second half of the week came in on Thursday, December 12th, the producer price index, a data that measures the average change in prices that producers receives for their goods and services. Now, one interesting thing about the PPI data is that it's considered as a key indicator of inflation at the wholesales level. Now, just like the CPI data, a rising PPI suggests increasing production costs, which can lead to higher consumer prices, that is inflation, technically, and potentially prompt the Fed to raise interest rate, and which could hereby strengthen the US dollar. And if you look at the actual data that came in on Thursday, that is yesterday, we saw a 0.4% for the month on month, a 3% for the year on year, which is a little bit higher than what market participants were expecting, and even higher than the previous month, further buttressing the inflationary pressure in the United States. Now, another event we looked out for yesterday is the initial jobless claim count, a weekly labor-oriented data released by the U.S. Department of Labor, which gives us an insight into how well the labor sector is doing. And of course, the data measures the number of people filing first-time claims for state unemployment insurances. And like I did say, a larger than expected number indicates weakness in the U.S. Labor market, and which could reflect negatively on the U.S. economy. So you can see the data came in at 242,000, higher than the market expectation, and of course higher than the previous month. So for Thursday, we had a mixed reaction, a mixed data, but to look at it all, considering the CPI from Wednesday, it's a little bit positive for the US dollar. And of course, we saw how the dollar rose significantly in the last couple of days. Now, going into the final trading day of the week, that is Friday, December 13th, we had a bunch of impactful events from the United Kingdom. We saw the JFK consumer confidence coming in lower than what market had expected. Sorry, a little bit higher than what market had expected. We also saw the gross domestic product month-on-month report, which gives us an insight into how the UK economy had expanded or contracted in the last 30 days. Now, if you look at the actual data here, we saw a deficit of 0.1%. In fact, market were optimistic. If you remember what I was saying here on Tuesday, that there is a positive sentiment in the market supporting that there will be an expansion from the United Kingdom in the previous month. And in fact, economists were projecting a 0.1%, but lo and behold, the data came in below what market had expected, bringing in a surprise. And in fact, the immediate reaction to this report was quite massive this morning. Then we also saw the industrial production and the manufacturing production, giving us an insight into the manufacturing sector of the United Kingdom. And in fact, the data was not too impressive at all. We saw a deficit of 0.6% from this data, below what market had expected, and of course below the previous month data. So data coming in from the UK this morning shows that the UK's economy is not doing very well at this point in time, and of course this may likely incite further bearish momentum as market participants round up their trading activity for this week. Now, besides all of this, there are no major events we are going to be looking forward to today. So what we are going to be doing now is to rely on our technical skills. Using it to identify structural patterns that will reflect how market participants are thinking ahead of the weekend, giving us that edge we need to strategically position ourselves for the next move. So with that being said, here we will be diving right into the business. I see you right there, C40. Good morning to you. Thank you very, very much. We are all doing very well, and I trust you're doing very well too. So the first asset we are going to be taking on this morning is going to be the US All Spot, and in fact we've done tremendously well since the beginning of the week, as at Wednesday's trading session we were able to lock in profit at around the $69 area with about 85 pips profit, though we came into this market very, very late. We joined this momentum very late, but the last couple of days are shown that we were able to be part of this uptrend scenario. Now, let's rewind back to the beginning of the week. What led to the decisions we made? Remember, we did not run the Forex Morning Mastery on Monday, so no trading session on Monday. However, we were able to spot that price action at the beginning of the week was sitting right above a robust demand zone we identified between the $66.50 level and the $67 area. And in fact, this was a very good signal for us to look out for patterns and structures that supports the idea of buying. Now, we also had our key level situated at the $67 area, further emphasizing the critical nature of price around this particular zone. Then, in addition to the demand and the key level, there is this descending channel we were able to spot after connecting the series of lower lows and lower highs since the month of November. So we had a support line right here, and then we had the resistance line around this area. Now, with price action starting the week from that support line and that demand zone, it was all clear price is likely going to the upside. And of course, we were able to capitalize on the break of the $68.15 level. And during my commentary on Wednesday's trading session, I did tell us that we are at a crucial juncture where we saw price action oscillate, or let me say, broke out of that descending trend line, that is the resistance line of the descending channel, giving us a sign that this momentum may likely continue. And in order to help us navigate this market on Wednesday, we were able to spot an interesting structure on the 50 minutes time frame. So for those of you who saw my commentary on my Telegram platform, this was where we were on Wednesday's trading session. So here is the resistant line of that descending channel I talked about earlier. We saw price broke out of that structure, and one thing I said here is that we will be looking out for price more buying opportunities at the break of the $69 area, just right here, since we never had price come back to retest the trend line. And this was exactly what we did, and of course we were able to scoop. Price moved over 100 pips prior to yesterday's trading session, and yesterday morning I did mention that we want to be adding more buy position at the break of the $70.15 level. Though we had a break, the position did not do very well, but after everything, we were on the positive side of our portfolio, and then we saw price action come back again into that same area. And like we have said, we will continue to buy as long as price remains above the $69.50 level. Now, if you do have a buy position active at this point in time, you will currently be running with a minimum of, let's see, about 76, 75 pips in profit. So I will ask you right now, it is appropriate to move all stop losses, secure the current buy position as we continue to monitor price action around this area. And if you would ask me, I will suggest that anywhere around the $69.60 and the $69.50 level is making a lot of sense to move whole stop losses to. Now, with a well secured position at this juncture, what is going to be our plans for today, especially on the last trading day of the week? Well, it's also important for us to understand the drivers in this market. What is it that is driving the sentiment behind the scenes? Why do we even have the bullish momentum to start with before talking about the barrier we are noticing around the $70.15 level? Now, we did mention this on Tuesday where we talked about the decision by the OPEC Plus group to delay planned supply increases until April and extend the unwinding of cuts until the end of 2026, which obviously has supported the stability in this market, reducing the risk of oversupply and making market participants to continue to have hopes for the US crude oil. Then another factor we mentioned at the beginning of the week was the optimism around Chinese economic stimulus, which have obviously bolstered the demand in the world's largest oil importer, providing upward momentum for the oil prices as well. Then we also have signs of a robust U.S. economic, considering the performance of the event for this week. Remember, we talked about the consumer price index. We talked about the PPI, that is the producer price index, all of which showed that there is inflation in the U.S. economy, which of course buttresses the resilient nature of the U.S. economy. Now, this of course has also strengthen the demand outlook for crude oil, as when there is a resilient signs of robust U.S. economic performance, that means there is activity and movement is going, and then the consumption of oil will definitely increase. So this obviously has lent support to oil prices. Now, the top one on the list here is the concerns around sanctions on Russia and Iran, which was a latest development this week, and we learned that there is a tighter sanction on this key oil producing nations, and this may likely mitigate downside risk, fueling fears of supply disruption, and will continue to support the uptrend scenario. However, if we look at the chart and look at how market participants had reacted in the last 48 hours, the emergence of this barrier around the $70.15 level is somewhat a concern for me. Now, you can see what happened. Despite the strong bullish momentum we've been enjoying since the beginning of the week, as soon as price got into this area, we begin to notice the momentum reduce, sellers coming in, and in fact the last 12 hours I've seen how buyers are finding it difficult to even come close to that area, which for me could be a red flag of profit-taking activity as market move into the weekend. Now, this recent range-bound price action and uncertainty, let me show you. We can see if we take all of this into account, you see we have a range-bound structure in the last 48 hours, which obviously emphasize the prevailing uncertainty at this point in time. And this uncertainty surrounding future supply-demand dynamics may make traders cautious about placing any aggressive bet at this point in time. So I will say price remains on the defensive below the $70.15 level, suggesting limited near-term traction despite these mixed fundamentals. So what are the challenges here that we are going to be facing today as crude oil is poised to register a strong weekly gain. I'm very sure the price of oil is going to close positively for the week. Remember, price started. Let me show you what things are looking like on the 1 hour time frame. So price started the week around the $67 area. That's right around our key level, and this is where price action is. I don't think price will drop all the way below this area. That's over 370 pips. I doubt if that will happen. So definitely oil prices will be closing on a positive side for this particular week. But at this point, we still are not sure what the path is going to look like. Now, if we take into account some other factors like the reduction in oil prices for Asian customers by Saudi Arabia, this for me is a concern about weakening demand in that region. Now, this is likely going to apply downward pressure on oil prices. Then we also saw during the course of the week, we talked about this on Tuesday, the IEA forecast of 1.5 million barrels per day increase in non-OPEC plus supply regions, outpacing the 1.1 million barrels per day demand growth, may weigh on the sentiment too. So if we take all of this into account, considering this dynamics, how is market participant digesting this information? Well, the last 48 hours has shown some signs of selling pressure around this particular area, and this will open me up into selling ideas around this particular area. So if buyers are finding it difficult to break through the resistance line at the $70.15 level, if this persists, then we have no choice than to get ready to join a sell right below the $69.55 level. So let me just indicate that right there, as it's going to be necessary for us to strategically position ourselves for bearish opportunities around this area. Now, why is that so? Well, if you look at what has been going on since the later part of the New York session yesterday, we saw how sellers are finding it difficult to break through this level after that first emphatic breakdown that happened during the New York session yesterday. Now, the inability of sellers to break through this area could be a temporary demand zone, where a breakdown right now, retest of structure, could be an opportunity to join that decline. Now, where is that decline leading us to? Remember, we have this resistant line of that descending channel we spotted on the 4 hours time frame, which is right here. And you know what happens whenever price action breaks out a key structure like this. We do expect that some point in time price is likely going to come back, retest the structure in an attempt to continue that uptrend move. So I want to see a breakdown retest of the $69.55 level as a counter trend opportunity that could yield a minimum of 120 to 150 pips if price action moves in that particular direction. So placing a sell stop order for those of us who are profitable this week, we can afford to risk a percentage of our portfolio or percentage of the profit we've made so far this week to test waters at the break of the $69.55 level. So let's see how this is going to play out today as we use this range bound structure as a yardstick to guide our decisions. Then, in addition to the range bound structure, is a trend line. We have a descending trend line marked out here. So as long as price remains below that trend line, let me thicken it a little bit and give it a red color to emphasize its importance. So as long as price remains below that descending trend line, we will continue to look out for selling ideas. So that is how we are going to be looking at selling opportunities here, which for me could be the beginning of profit-taking activities ahead of the weekend. Now, if the contrary happens here, that is, buyers, the sentiment in the market continues to persist, that is, Buyers continues to bank on the resilient U.S. economy, the potential Chinese stimulus measures, the OPEC plus postponement of supply increases, and of course, sanction on Russia and Iran. This could lead to the breakout of this trend line, and that will give me a signal to get ready to continue the uptrend move. Now, in this case scenario, due to the fact that price has been finding it difficult to break out of the $70.15 level, I would rather want to see confirmations before jumping into the buy, and this will reflect on the chart as a retest of the structure, join the buy after a retest, and then add more position at the breakout of the $70.15 level. Now, if price does not break out, retest the trend line, and it continues to rise to break out the $70.15 level, I will not buy right away. I will wait for the retest of the $70.15 level to happen, or retest of the structure. All I just want to see is continued buy pressure above that trend line before jumping into a buy. So that is how we are going to be navigating this market today. And as you will see, we have a simple trading setup using this range bound between the $70.15 level and the $69.55 area to help us navigate today's market dynamic. So let's see how the market is going to play out around the structures. Mark out those levels accordingly on your chart, as you will definitely be needing them as a reference point to guide your independent trading decisions. So that is my simple view on the US All Spot for today. If you have any questions whatsoever, feel free to let me know in the comment section, or you need some further clarification, I'm here and willing to be of help in that regard. So I'll take the next 10-15 seconds off. Let's see if there are questions before we move on to the next asset on our watch list. And do not forget to give that video a thumbs up, right? Thank you very much, guys, for supporting the channel. Hello, Jonah Haruna. Good morning to you. How are you doing this morning? All right. So, in the absence of no questions, I will take the silence as a confirmation that we are all on the same page. I hope you marked out the levels, the trend lines accordingly, as we will be needing them to guide our decisions today. And what else would I like to say here? Okay, as regards to the sell position, I forgot to mention, as soon as price moves close to this area around the $69 area, we want to be moving our stop losses at least to secure the sell position, so that we never can tell. Remember, this is a counter trend opportunity. Price could reverse at any point in time. So as soon as price moves significantly in our favor, let's move our stop losses, secure the position. So I wish us all the best of luck on the US All Spot commodity. So moving on. So The next asset we are looking at this morning is the GBPUSD, that is the British pounds against the US dollar. And of course, at the beginning of the week, we were quite positive that the pound sterling is going to rise as market sentiment was leaning towards a positive data coming in from the United Kingdom. Market participants were looking forward to the GDP, the consumer confidence report, the industrial production report, the manufacturing report, all of which came in earlier this morning. And due to these expectations, we were considering buying ideas at the beginning of the week, where we saw price action trading above that ascending trend line we spotted at the beginning of the week. Remember, this trend line was on the 4 hours time frame, and of course, as long as price remains above or around our ascending trend line, we want to be looking out for buying ideas. Now, secondly, we had our key level at the 1.27200 area. Price remains above that structure, strengthening our bullish bias in this particular market. And in fact, we had a couple of buy positions at the beginning of the week. Remember, we bought the breakout of the 1.27510 level, this level right here. That was our first resistant line for the week. We saw price move about 30 pips, move stop losses to break even. Price came back to take us out at break even. Then we also added another buy on Wednesday, which obviously did not do very well at all as price dropped to the downside due to the persistent, resilient US economy. Now, during the midweek, we had some new developments as regards to structural details to guide our decisions, which was duly identified on the 15-minute time frame. Now, as at yesterday, let me see. Was it yesterday or Wednesday's trading session? Okay, we had this old structure identified. That was on Wednesday. For those of you who followed me on my Telegram platform, we were looking at this temporary demand zone around the 1.27235 and 1.27350, and as long as price remained above that, breaking out of this descending trend line, we were willing to hold on to our bullish bias. So we saw this whole situation happen. Price broke out, retest structure helped us to join this uptrend scenario as price moved over 50 pips thereabouts, and of course moving stop losses accordingly helped us to secure some out of this position before that bearish move began. And during our my commentary yesterday morning and in anticipation of the PPI data, we identified a new structure using this ascending trend line to help us navigate the market. So we were looking at buying ideas as long as price remains above the trend line, and looking out for selling ideas if price remains below the trend line. And if you saw my commentary this morning, yesterday morning, I emphasized in that commentary that we are at a crucial juncture as price action continued to oscillate around the 1.27600 area. In fact, I bought around that area, hoping that price will respect that ascending trend line to continue that uptrend move, which obviously failed, and we saw price drop to the downside, taking me out of that buy position. Had the sell position triggered here, and then I was, in fact, if you saw my indication here, I said short-term sell position, sell breakdown retest. So I was hoping that maybe the worst case scenario would be around the 1.27, but as you will see, price continued to drop, moving my stop losses accordingly to secure position this morning following that negative report from the UK, where we saw let me show you again. We saw the gross domestic product come in at a deficit of 0.1%. Industrial production came in at a deficit of 0.6%. Manufacturing production also came in at a deficit of 0.6%. So it's not looking rosy for the pound sterling. So at this point in time, if you still have a sell position running at this point, kindly move all stop losses and secure your position. Now, where's most appropriate? I will say the 1.264 area is looking promising to secure all sell position. Now, with a well secured position at this juncture, what are the chances for us today to either buy or sell? Well, if we look at the market driver, things are not looking rosy. The UK GDP unexpectedly contracted by 0.1% in October, which of course is not in line with what market had expected. We talked about the both the manufacturing and industrial production, which also fell by 0.6% month on month, indicating two successive months of decline, far from what market had anticipated. And then the Labour Party's decision to increase national insurance contribution from 13.8% to 15% has also led to higher employer costs, potentially reducing labor demand and domestic consumption. This is another factor we need to take into account, and this will definitely exert downward pressure on oil prices. Now, following the weak GDP data, I think that the immediate negative market reaction to the economic indicator may likely persist into the end of this trading day. Now, in as much as the path of least resistance for the British pound is looking bearish at this point in time, we should not ignore the positive drivers behind the scenes as well. We also have the upcoming Bank of England interest rate decision coming up next week, I think. While the Bank of England is expected to hold interest rate at 4.75%, the decision could provide clarity on monetary policy, but with this recent development, I doubt if that will happen, bringing some level of uncertainty into this market. Now, we also have the anticipation of the consumer price index from the UK and employment data coming up next week, and this could drive renewed focus on the GBP. But I'm thinking that there might be extended sideways trading activities as a result of that, as major key players may want to wait for this data before making any informed decisions. So, the combine of the upcoming UK employment and inflation data, and of course the Bank of England interest rate decision, are likely to induce some choppy market conditions around this particular area. So how are we going to navigate this market after looking at this market driver? How is the market digesting this information? Well, I would like to maintain my focus right here on the 15 minutes time frame, where I will be looking out for structural details here to help me navigate this market. Now, if we look at what has been going on here in the last 2 hours, you will see that an indecision is going on right now, where we have a resistant line along the 1.26365. I hope I'm correct on that one. 1.26365 level. So we have a resistant line there. We can see despite the buy pressure in the last 2 hours, this area had continued to negate buying attempt. Then secondly, we also have a support line here. I'm not sure. Okay, 26250. So let's mark that one out too. So I will bring out my candle chart right now to see if this is most appropriate. So we have 1.26250. So we have a beautiful range bound structure going into the final trading day of the week. So you know how we do it. Whenever we identify this kind of range bound structure, we want to exercise patience and wait for price action to either break out of the resistance line to give us an opportunity to buy, or break down the support line to give us an opportunity to sell. So we'll continue to exercise patience here. This could take about an hour, 2-3 hours before that breakout finally happens. Now, let me tell you how I'm going to be trading this. Now, I'm not going to be buying the breakout outrightly, considering the fact that we are on a strong bearish momentum. And if we do consider the fundamental factors here, talking about the GDP contraction, the decline in the manufacturing and industrial sector, increased employers' cost, and the slump in the pound sterling, I would want to wait for confirmation before jumping a counter trend opportunity. So what this simply means is that I would rather wait patiently for the signal to emerge, which is the breakout of that structure, and then exercise patience and wait for a retest to happen. This could be identified on much more lower time frame, like the 5, 3 minutes or 10 minutes time frame, where the inability of sellers to maintain pressure below the 1.2635 will be all I need to continue that uptrend move. Now, mind you, this is a counter trend opportunity. If you are not comfortable taking counter trend opportunity, you can stay clear of this market. But please, for those of us who still have sell positions running, I told us earlier, move your stop losses accordingly, secure the market position, your position, because we never can tell how the market is going to react to this range bound structure. So for counter trend opportunities, we want to be on standby. As soon as price moves in our favor, we move stop losses accordingly, securing positions as price moves further to the upside. Now, for the fact that this market has been on a strong bearish momentum, I would want to place a sell stop order below the 1.26250 to continue the downtrend move, and of course have our stop losses way above the previous resistant line, which will be between 10 to 13, 14, 15 pips thereabout to continue that downtrend scenario. So I'm leaning towards a bearish continuation, but I'm still open to the possibility of a breakout retest of the 1.26365 level. So let's mark this house. It's a very simple trading setup. All we just need to do is exercise patience and allow the structures to mature. Now, some of us will be asking, what if the market does not come back and retest structure? Well, I'm going to pass that trade if that does not happen. So keep this in mind and let's see how this will play out. I want to wish us the best of luck on this one. Let's see if there are any questions. If you have any questions or you need some further clarifications, feel free to drop them in the comment section. So as usual, I will take the next 10-15 seconds off. Let's see if there are any questions before we move on to the final asset on our watch list for today. Stay tuned in. All right, so in the absence of no questions, we'll take this as a confirmation that we are all on the same page. I hope so. It's a simple trading setup we have here on the GBPUSD. So let's wait patiently for the structure to mature, and whatever direction the price action breaks through will give us an insight into where price action is likely going to close for today. So I wish us all the best of luck once again. So moving on to the final asset on our watch list. So the final asset on our watch list for this week is my favorite, the XAUUSD, popularly known as the gold spot. And what a wonderful week we have here on this particular asset, as we have been buying the XAUUSD since the beginning of the week, thanks to the geopolitical tensions, the US political uncertainty, the anticipation of the Fed interest rate cuts, and of course, escalation in Israel-Syria situation. And this has further drove price action, finding higher highs and higher lows. Now, let's rewind to the beginning of the week. What are the structures we saw on this chart, and what are the things we looked out for to decide buying the XAUUSD from a technical standpoint? Now, the first thing we saw here on Tuesday, which was our first session for this week, we saw this demand zone between the 2605 and the 2620. This structure here is looking a little bit similar to that structure we saw on the USOILSPOT. Remember, we had the beautiful demand zone, which has been consistent in the last 1 month, where sellers have been finding it difficult to break through, as every time sellers come into the structure, we see markets see the gold as cheap enough to buy, giving us a robust demand zone and making that area our key level for this week. Then we also have a descending channel identified here, where we have the resistance line at this point, and then we had the support line here, but the support line wasn't that really important for us this week, as price never even come close to that particular area. So the major structure was the resistance line of that descending channel, and after identifying a range bound structure between the 2650 and the 2627, we were of the opinion that a breakout of this trend line and key level, resistance level at the 2650 will be all we need to continue that uptrend move. And I bought around that area. That was on Monday. I bought behind the scenes, but on Tuesday I told us all that we'll be looking out for price. Either we had two options on Tuesday. Remember, we said here that price may likely come back to retest the trend line. If it does, we want to be looking out for reversal setup to continue the uptrend move. And if that does not happen, a breakout retest of the 2675 will be a good confirmation for us to join the uptrend continuation. And look at what happened. In fact, price moved approximately 500 pips from that breakout of structure. So even if you missed out on the early momentum, the market was kind enough to give us some significant move from that particular area. And of course, I did had some structural details on the 15 minutes time frame to help short-term traders, day traders or scalpers, to allow the continuation of that uptrend. I think I still have those structures here. I just want to show you for clarity's sake. So this is one right here. I think I shared this on Tuesday. Immediately after our live session on Tuesday, I updated us with this simple structure with the 2665 serving as a crucial level. We saw price break out of the structure and a 2655 to help us navigate that uptrend scenario. Then I think that's all for that. I think so. Okay, so that is that we have there on the yesterday, that is Thursday's trading session. I can remember updating us with a new trading setup here prior to the release of the PPI data. Remember, we saw this beautiful structure on the 15 minutes time frame yesterday's trading session. For those of you who saw it, I hope you took advantage of this opportunity. We had two trend lines. We had a descending trend line, and then we also had this ascending trend line, which captured the consolidation phase in the market. And as you see, when we have this kind of consolidation, as the trend line continues to contract gradually, it will lead into an explosion at the edge here, either to the upside or to the downside. Whenever I see this kind of structure, I'm always very, very optimistic of the momentum in the particular direction it breaks out to. So if it breaks to the upside, the momentum is going to be very, very strong. And if it breaks to the downside, the momentum will also be very strong. But as you will see, price broke to the downside here. And at some point, I was beginning to doubt the bearish move, but we had no other choice than to stay faithful to our analytical approach. So what I did here, we saw the price come back, retest structure. I moved my stop loss to break if I was taking out. Then I risked another sell from here, and look at what happened. Price action dropped significantly. I had my TP target at 2,680. That was about 350 pips move, and some of us could have taken more of this one. Well done, everyone. Kudos to you for those who did capitalize on this trading opportunity. And since then, we have seen the market go through a consolidation phase as price action continued to oscillate within the 2,690 and the 2,680 in the last 15 to 18 hours, further emphasizing the prevailing uncertainty in the market at this point in time. Now, as we prepare for the final trading day of the week, which is peculiar with profit-taking activity, will this bearish momentum persist, or are there chances that buyers can still come back into the market and push price higher? Well, if we look at the fundamentals, that is the major driver. The geopolitical tension, that is the Russian-Ukraine war, and tension in the Middle East will definitely continue to support gold as a safe haven asset. And then we also have concerns over President-elect Donald Trump's tariff plans, which also contributes to the safe haven demand for gold. Remember, we talked about this. I think we talked about it last week, where Donald Trump threatened to increase tariffs for some certain countries, which he did mention, which obviously has sent a ripple of uncertainty into the market. Then we also have the sentiment surrounding the pricing in another interest rate cut by the Federal Reserve next week, providing another support for gold prices. Now, the escalating tension in the Middle East, the Israel-Syria situation, where Israel's decision to maintain military presence in Syrian territory until a new security force is established, escalates tensions further, pushing investors towards the gold safe haven asset. Now, all of this supports an uptrend scenario. However, if we take a closer look at the U.S. economy and what is happening there, we have higher U.S. Treasury bond yield at the moment. The Treasury bond is gradually recovering following expectations of a cautious Federal Reserve on cutting interest rate due to the stalled progress in lowering inflation to their 2% target. Now, this for me could support or limit the upside trajectory on gold, and this obviously has led to a strong US dollar at this point in time. And for me, we are within an indecisive phase right now, where both the negative and positive drivers both have a strong stance for market. However, we need to take a closer look at the sentiment in the market right now, where investors may likely remain, let me put it that way, on the sidelines ahead of the FOMC policy meeting coming up next week, as they await a clearer clue on the interest rate trajectory. Now, this is following that stronger than expected PPI and CPI data, which suggested inflation challenges and reinforcing mixed signals around the gold market near-term movement. Now, in order to help us capture this uncertainty going on in this market right now, I was able to identify a simple trading setup right here on the 50 minutes time frame that will help us navigate this market today. And in fact, if you look at the structure, it's looking a little bit similar to the structure we saw here yesterday that helped us to join this bearish move. Now, what am I saying here? Look at this. We have a descending trend line, as you will see here, capturing the series of lower highs, and then we have the ascending trend line. We capture the series of higher lows. And I told you earlier, whenever we have a structure like this that continues to contract at a point where it will likely break out, the momentum is going to be very, very strong. We either see price break out of that structure to the upside or break it to the downside. And of course, I did had a sell stop order right below the 2,681 to help me join the bearish move. So I have a sell position triggered already and running with about 70 pips in profit already. So I'm going to be moving my stop losses accordingly to secure some profit, maybe 20 pips or 30 pips profit at this point in time, while I continue to monitor price action around this particular area. So let's see how the market is going to play out today. So this is my simple trading setup for today's trading session, and as long as price remains below this descending trend line, we will continue to maintain a bearish bias in this particular market. Now, for those of us who had missed out on this sell at the breakdown of the 2,681, well, don't let us get too worried at this point. Let's exercise patience and see if the market will come back to retest the structure. It could be a retest of the 2,681 or the descending and ascending trend line. But what we want to be looking out for is continued selling pressure. We want to see signs that buyers are finding it difficult to break out of this descending trend line. And if this happens, we want to be joining that bearish move to the downside. Now, if that does not happen, it's not all the time the market comes back to retest structure. This is a theoretical expectation. It's not all the time the market comes back. If it doesn't come back, then we want to be looking forward to see how the market reacts to this area. In fact, looking at what has been going on here in the last 45 minutes, we have a structure here. We have a support line here at the 2,671. You want to be marking that level out right now. A breakout retest of that structure will definitely incite sell continuation to the downside. So let's see how the market is going to play out here. If price goes ahead to break down, retest the 2,671, I will be willing to add more sell position to my existing trade. So that is how I'm going to be managing my XAUUSD today. Unfortunately for go-go challengers, I will not be running any session today on the go-go challenge. I'm not be scalping the market today, and the reason is basically because of I'm traveling in about 3 hours from now with my daughter. I told you about our performance during the just concluded Nigerian National Chess Championship, where she came in third position, and so today is the award night. So we are going back to Lagos today for the award night. So we need to be on the road very, very early so that we don't get caught up in traffic. So as a result of that, I will not be scalping the market today, but we will be back next week, Monday, to continue from where we stopped this week. This week for the go-go channel was a very profitable one. We were able to make about 100 plus in dollars during the course of the week, and so we hope to continue from there next week. So I'm very sorry about that. So that is all I have for you today on the XAUUSD. I hope I made myself very clear on this one. If you have any questions whatsoever, feel free to let me know in the comment section. So I will take the next 5-10 seconds off. Let's see if there are any questions before we start rounding off on today's Forex Morning Mastery. So I see your comment here, C40. Good morning to you. It says here that yesterday my initial 2,715 sell position after being protected was taken out. Could you please explain your process to re-enter once this happens? Very good question there. C40. Let me go back to that area. I'm very sure you are talking about this. Hold on a second. Where is that chart again? Okay, I think here. Okay, this is what you're talking about. I explained to you what I did here earlier while I was discussing this. So initially we had a sell position triggered, and I begin to doubt this bullish move, this buy pressure. So move my stop loss to break even, got taken out of this area. Then for about 30 minutes, I saw how buyers were finding it difficult to break through this area. So for me, and the fact that price still remains below that descending trend line, obviously we want to be maintaining our bearish bias irrespective of being taken out of that position. So as long as price still remains below that structure, it still makes a lot of sense for us to continue to maintain that bearish bias. So I had to join. I think I joined around the 2007-13 after observing that buyers are finding it difficult to even come close, let alone breaking out of that descending trend line. So I joined right there. Now let me say this quickly here. Now if we have levels identified on our chart, let me just clear this and let me show you something in case of future reference. So if we have levels like this, so in this structure here, we have a structural detail and we have two levels. Let me indicate it. So we have a resistant level here at the 2007-18, as you will see. We also have another level at the 2007-15. Now, what does this level tell us about the structure? It tells us two things. Now, the resistant level says if price breaks above the 2007-18 1850, we want to be buying. So price breaks out of structure, we have to buy. Now if price comes back, drops below the structure, we are still going to place a buy stop order above the 2007 $18.50 level to continue the buy because it's still above the trend line. So we will continue to buy as irrespective of being taken out. You can be taken out 5 times in a trade. We'll continue to buy and buy as long as price remains above the 2007 $18.50 level. The same thing applies to the bearish buyers here below the support line at the 2007-15. So if we sell, we get taken out, we will look out to sell again, we get taken out, we'll look out to sell again, we get taken out until finally that bearish move move to the downside. So most times, market are very indecisive at this crucial juncture. So they buy, they get out of the position, they buy, they get out of the position. Then finally, they begin to gain some confidence, and the momentum gets stronger and stronger. And if you had missed out on any of these re-entries, you will just miss out on the whole move. So this is where risk management comes in. So if you're risking too much per trade, you will definitely not be able to take the multiple re-entries because you've exposed yourself immensely into the market, losing a lot of money around that particular area. But if you're risking as little as possible, you're risking a percentage of your portfolio that your emotions can manage. For instance, 0.5% of your account size, 1% of your account size, depending on what your portfolio size is, you will be able to re-enter as many times as possible. So this is my simple explanation around this this kind of structures whenever it happens. So I hope I made myself very clear there. C40. If I didn't, as always, let me know in the comment section. I will try to rephrase and see how I can explain it much more better. So I would love to hear from you if that was quite explanatory, so that we do not want to be repeating that same mistake all over again. So this is where risk management comes in, and as well trust in the analytical approach. So that is that on that one, C40. All right. Okay, I'm very glad you found that useful. You are welcome, and thank you very much for the Johnny messes. All right, all right. So it's on this note we have come to the end of today's Forex Morning Mastery. It has been a wonderful moment with you guys. I really appreciate every single moment. And today we were able to take on, though we did not start this week as we were supposed to, but the 4 trading days we had was quite resourceful and productive. We were able to do very well across the asset we're monitoring. The USOILSPOT, we've been buying it, that commodity, since the beginning of the week. The GBPUSD as well, we had some challenges during the course of the week. We had a loss, I think, before that massive sell happened this morning. And of course, the XAUUSD has done tremendously well as we were able to scoop in significant amount of profit, over 600 pips on that particular asset, though we never had the privilege of having multiple entries, but we are just doing fine at this point in time. So hopefully we will continue that trend today. That is, like I did say, I'm not scalping today. So for those of you, for the go-go challengers, we are not going to be running that session today due to my journey. We'll come back next week, like I said earlier. And it's on these notes, I want to wish us all the best of luck. And please always remember, every decision we make in the financial market is more or less an educated guess until price action hits your TP target. So with this understanding in mind, let's ensure to have a well-defined risk management strategy in place. And for those who joined us for the first time, I do hope you are able to gain 1 or 2 things from what we have discussed here today. If you did, you want to be part of our subsequent editions. The more time you spend with us in this community, the better you get to comprehend my analytical approach, which eventually can be used to improve your own trading strategies. So I look forward to seeing more of you. Monday is the next session, 9:30 a.m. West African time, 8:30 a.m. UTC, as we come to start the new week on a positive note. I think that next week will be our last trading week for the year. I rarely trade during festive period due to the low liquidity in the market. So that next week will be the last trading day of the week. Let's see how well we can capitalize on the final trading week for the year. And For those of you who are yet to subscribe to the channel, please do right away, as I will be sharing some insightful trading ideas during the weekend as we prepare for next week. It's something you don't want to miss out on. So click on that subscribe button. And for those who are yet to click on the like button, please do so right now. It goes a long way in helping this community to grow. And for those who had liked the channel, thank you very much. So it's on this note I want to wish us all the best of luck. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye.